But Treasury yields have come up in the last week, roughly since the presidential debate. Joining us right now is Komal Sri-Kumar, president of Sri-Kumar Global Strategies. We also heard from Jay Powell yesterday over in Europe about what he thinks the path of things are, which may take a little bit longer than some had anticipated. Sri, though, you've been right about this. The question now is, what do you think the path is?
The path, I think, clearly depends, Andrew, on what the two candidates are going to be saying and doing from now the next couple of months. Clearly, the yield curve steepened since Thursday night because after Biden's dismal debate performance, because with the chances of a Trump presidency rising, the long-term bond yields have risen. And the issue is, what does Donald Trump do about it? To the extent there is a reaction, and he talks about how deficit may be kept in check, tariffs are not going to be comprehensively issued, but only on selective imports, that is going to give a lot of confidence to the markets and likely to bring the yield down. So that is the immediate impact. Longer term, it depends very much on what the fiscal deficit is going to perform like, because we have clearly a big expansion in the deficit, big expansion in spending, which needs to be controlled, Andrew.
Are you surprised about just how the markets are reacting right now? I mean, we're basically just high, and I can't tell whether you think that we're in for a turn at some point in all of this. And you'd think also there'd be more volatility, even given what we're hearing around this presidential election at this point.
You do have, first, two things. One, the equity market is rising, and the impact or the influences are very different from the bond market. You have technology, you have NVIDIA, you have the AI boom, which is all affecting equities in a way that fixed income doesn't get affected. You mentioned volatility. You don't have as much volatility on the equity side. But the treasuries have been extremely volatile. You can see, if you go back 3 months, how they have been up and down. And we have had in the 10-year yield, we have a move up of about 15 basis points immediately after the debate. So the bond market has taken the volatility hit, whereas the equities are doing well due to other considerations, Andrew. And I don't think that is going to change in the next few months.
And do you think right now the market's just pricing in a straight Trump win? I mean, we keep talking about this sort of prisoner's dilemma issue. If you believe that President Biden is going to get switched out with somebody else, and I don't know if you believe that, does that change the entire equation all of a sudden?
First of all, the bond market is not assuming a Trump victory. It has increased the chances since Thursday. That's the first thing. Second, if there is a switch of candidates on the Democratic side, it depends on who it is going to be. Vice President Harris is frequently mentioned. And if she's the one who replaces him, the question is, what does she say she is going to do in the days and weeks after the nomination? Can it change the conversation? Can it change the direction of treasuries? Yes, it can. But it is not going to be a wholesale definition until the elections are over, because the elections have to end and you have to find out who wins. But if there is a switch of candidate, clearly it is going to influence yields.
Sri, maybe you can tell us where you land on this question. It's my last question, because we got to get some data. Inflationary pressures, one of the things we talked to former President Trump about this idea of what the tariffs would look like and how inflationary that may ultimately be. But what we were talking with French Hill about earlier is, in fact, whether former President Trump would, in fact, implement the tariffs he's talked about if he becomes a president, or whether this is a negotiating ploy, if you will, with China and others.
I think it is very much a negotiating ploy. I don't think it is going to be comprehensive, because I think he and his advisors would realize that it would push up the inflation rate. The question is, though, the bond market right now is affected. Every statement that is made is going to push up the yield. That's why I think, in addition to a negotiating strategy with the Chinese, he needs to have a negotiating strategy with the U.S. voters and be more careful on the statement.
Sri, we got to leave it there. We appreciate your perspective. As I mentioned, you've been right about a lot of this, so we're going to listen to your words with a lot of attention. Thank you. Talk to you soon.
Thank you, Andrew.
Wish you a happy Independence Day. You bet.